Good morning to some of you who joined from somewhere else. We are in Geneva, and I guess our speaker is not here, but he's joining from the US. Warm welcome to the Youth Ecopreneurs Learning Series. And today's session, we are going to discuss about insurance schemes against climate shocks. And this webinar is organized by the International Trade Center. We are a UN organization with a focus on small businesses, and we work closely with small businesses across the globe, including youth-led businesses and also green businesses. And in today's session, we will be facilitated by Sidley Austin. And to give a brief introduction about Sidley, I would like to hand it over to my colleague from Sidley. You may have the floor.
Thank you, Chirika, and hi, everyone. My name is Diana Carvalho, and I'm the Pro Bono Coordinator of Sidley's Emerging Enterprises Pro Bono program. Great to be here with you today with this young crowd and already see so many familiar faces and names. I'll be very quick in the interest of time. So the main goal of the Emerging Enterprises program is to support MSMEs and social enterprises from developing countries with international legal advice that they need on a pro bono basis. So I'll drop my email in the chat box, and if any of you is interested to learn more about our services, application process, eligibility criteria, please feel free to write me an email. And I'll stop here and turn it over to Chirika to get started with the presentation. Thanks, everyone.
All right, thanks so much, Diana. And as she said, for those of you who just joined, feel free to drop us questions, or even if you would like to introduce about yourself or your business, feel free to write us in the chat. And so for now, I will just hand it over to our speaker, John Grothaus. So I will stop sharing my screen. So John can share his slides.
Excellent. Okay, can everybody see the slides okay? Do we look all right?
Yes.
Excellent.
Yep.
Awesome. Well, thank you everyone for joining. As was introduced, my name is John Grothaus. I'm a senior managing associate at Sidley in Chicago, and my practice is focused on insurance transactions. And so to give a little bit of background, that's a lot of capital markets and sort of very sort of back-end transactions, not the interaction between an insurance company and their policyholders. But I was able to get a little more information to share with you all today. So a couple of caveats before I get started. I am a US lawyer, not trained or qualified in any other jurisdiction. So I'll be giving some sort of business background advice and thoughts here, but should qualify that if you have specific legal questions, I would encourage you to contact Diana, because maybe we at Sidley can help with them. But other than that, recommend, of course, talking to an attorney in your jurisdiction, in your country. And then also that the views are mine and not necessarily Sidley's. But with that, I'll go ahead and get started, if that's okay. Excellent. So we're going to cover a few topics today, and in the interest of time, I'll try to move quickly. I also do want to really encourage you, if you have questions, to please don't hesitate. I'd love for this to be as much of a conversation as it can. So I'm happy to speak with you face to face, or if a question pops up in the chat, Diana, or if someone can let me know, I'm happy to answer them that way as well. So a few things that we wanted to cover. The first is just a general overview of insurance and business insurance. Second is a bit of an overview of the key players who's involved. Third, we're going to do a little bit of a sort of decision tree or thought process on how you decide what, if any, insurance your business might need. And then finally, we do want to talk a little bit about climate shocks and climate change. That's something that has a huge impact on the industry. From the huge companies to the micro insurance companies. And so that's, we'll cover that a little bit as well. So to start off with what is a little bit about business insurance, and we'll even take a step further back to say, what is insurance? And really at the to take it down to its most basic, insurance is a contract. So insurance is a contract where I, let's say, own a car, and I enter into a contract with an insurance company where we say, if my car gets in an accident, you'll pay me to fix the car, or you'll pay me for damages or for things that happen. So, so at its most basic, it's really just an agreement between an individual or a business and an insurance company that when a set event happens, the insurance company will pay a set amount. Taking a more holistic look, though, insurance is really about shifting and sharing risk. So when you're looking at your small business or your MSME, and you think about the elements of the business that are key, what you can't live without. Maybe it's machinery, maybe it's employees, maybe it's crops, maybe it's some sort of commodity. All of your business, if you don't have that one thing or those 3 things or those 10 things, you can't conduct your business. And so rather than having all that risk stay with you, that if something happens, you're out of luck, you take all of the losses. Insurance is a way to either shift that risk to an insurance company by saying, if something happens to my truck, my car, then you'll pay for me to get a new one, or to share that risk, which is to say that if something happens to my business overall, I will take the first, I'll pay some of the losses, but you, the insurance company, will pay some of the losses as well. So before we move on, I wanted to just cover a few key sort of defined terms, and apologies if this is, everyone may already know these, but just to be safe, I wanna make sure we're all talking about the same things. So when we talk about a policy, that's really the insurance contract. It's referred to as an insurance policy. So that's the agreement between the individual or the business and the insurance company. Coverage means the amount that and the types of events that the policy will pay for. So for example, with life insurance, you might have coverage that says, if something happens to me in the next 10 years, then my family will get a certain amount of money. So coverage just refers to what is being covered, that's me, and then how much and for how long. A deductible is the risk sharing that I was talking about. So depending on the type of insurance policy you purchase, you may need to pay a certain amount before it kicks in. And so what that means is, if you have, for example, again, a car insurance policy, and I have a car insurance policy that says, if something happens to my car, the insurance company will pay to fix it, but only if I pay the first $100 or $50. And so that's referred to as a deductible. That's the amount that I or the company will pay before the insurance company kicks in. The next term is limits. And when we talk about policy limits, those are usually financial figures. So you can insure your business for a variety of things, but the insurance company might say, we'll insure your business for all of these things, but only up to $1,000 or $100,000. So there's a limit on how much the insurance company will pay. Just 2 more, and then we can move on to the fun stuff. But the first is premium. And what premium means is that's the cost. So that's the amount that the individual or the company pays to the insurance company in order to receive the policy and the protection. And then finally, when we talk about the term, that's just how long the policy will last. So if you can buy a policy for 6 months, you can buy a policy that lasts for a year, you can buy a policy that lasts for 5 years. And that length of time where the insurance company is covering your business is referred to as the term. So unless there are any questions there, that would be helpful to go into just a quick overview of some of the types of insurance. And I raise these because they can all be relevant to business owners and entrepreneurs. So the first is life insurance. It's exactly what it sounds like. You ensure that someone remains alive. And so this can affect business owners if you have a key employee, or maybe you yourself are the key employee, and you know that if something happens to you, your business can't continue. And so you can get a life insurance policy that says, if something happens to me in the next 20 years, the insurance company will pay a certain amount to the people I designate. So that could be a family member, that could be your business itself, that could be investors. And so that's life insurance. We won't talk a lot about that in this presentation because I think it's probably a little bit less relevant to a lot of these enterprises, but it's something that's important to know about. The second is health insurance, and this is definitely very much a US concept and not as relevant in a lot of other countries, but it insures you for medical costs. And this is oftentimes something that becomes relevant if you have employees that are traveling outside of their home country. So if you have 10 employees, but they regularly need to go to Europe or they come to the United States, this is something that you might want to consider so that if they get sick while they're traveling or have an accident, their medical costs would be covered. The third, and this is where we'll really focus today, is called property and casualty insurance. And this is also exactly what it sounds like. It's insurance of property. So buildings, machinery, computers. It can cover sort of anything from damage, from theft, from from natural disasters, from climate shocks. So from really a variety of sort of bad events. And then the last is specialty insurance. And we can talk a little bit more about that as well, if it's relevant for anyone who's joining our webinar today. But specialty insurance is really something that's very unique to an industry. So some examples would be marine insurance. If you transport items by boat or you have a boat, that's a form of insurance that you might need that the average business might not. So as I was just saying, when we talk about general business insurance, that often involves property, auto insurance, meaning insurance over vehicles, cars, trucks, et cetera, liability insurance. And what that specifically means is if you are sued or if someone tries to say that you've caused damage to them and have to pay, the insurance company does that. So the classic example of liability insurance is you own a shop. It's a rainy day like it is here in Chicago today. That's why the blinds are drawn, so I don't depress you with the terrible weather. But it's a rainy day and someone comes into your shop, they fall on the floor and they break an arm and they say, this is your shop, your floor was slippery, you should pay me, you should pay for my medical bills, or you should pay because I'm unable to work. That's liability insurance. I think that that's very relevant in a primary thing in the United States. Depending on the country where you operate, that might be less of a concern, but liability insurance doesn't pay you, the business owner, anything. It pays other people if they try to take money from you because of something that happens with your business. We've already discussed a little bit life insurance, so I'll skip that. But the final place where I wanted to stop is what's called business interruption, or sometimes income insurance. And this is really an interesting area that's become super relevant during the recent pandemic. And what this says is that if for whatever reason you have a fire, you get sick, your town is closed down because of a pandemic, and you're not allowed to operate your business, the insurance company will pay you a set amount to replace the income that you lose during that time. And so this was something that was not as common until the coronavirus hit. And since then, that's been an area that lots of businesses in the United States and Europe and elsewhere have relied on to replace the income that they otherwise would have lost because their business had to be closed. Just briefly, I want to also go into some specialized types of business insurance. The first is crop insurance that we can talk about a little bit more if anyone's interested. That protects against natural disasters or droughts, et cetera, so that if you're growing a certain crop and a natural disaster wipes it out or climate conditions wipe it out, you'll still receive sort of the profits that you would have expected to make. Marine insurance, which I mentioned previously, if anyone is involved in transporting things by boat, especially if you own the boat, that's a type of insurance that you really want to consider. Equipment insurance is a sort of a type of property insurance. So maybe you're not worried about your building, but there's a particular machine that you rely on to do your business. Rather than insuring your whole building and your whole business, you can take out insurance just on this machine so that if this machine breaks or these machines break or your computers get stolen, the insurance company would help you replace them. Another area that is becoming more and more common is cyber insurance. And this is something for anyone who works, especially if you have customer data saved somewhere online. So that can be national identification numbers, birth dates, credit cards, bank information. Cyber insurance is something to consider because if there's some sort of cyber attack and that information is stolen from your servers or from your website, then you can be in a position where your customers, whoever gave you that information, could come to you and ask you to replace any money or cover any costs. And so that's something that was, starting maybe 10, 15 years ago. 20 years ago, it was almost non-existent, and now is very common. And almost every major business in the United States has this, and I think several in Europe as well. So it's becoming more and more common across the world. And then finally is professional liability. This is one that we lawyers care about because it means that if you're a lawyer or a doctor or in some other profession where you can be sued for not doing your job well, where you can end up, if you don't do a good job, someone can come and try to get money back from you. You're required to have professional liability insurance, oftentimes by licensing agencies. So before we move on to some of the insurance players, the one last area that I wanted to mention is that there are combinations. So we've talked about a lot of different types of insurance, and we'll talk a little bit later on about how you decide which ones you might want. But one of the options that you'll often find is some sort of combination. It might be called a bundle, meaning you bundle together a variety of types of insurance into one policy or one package. And so when you're looking at these, it just means, like I said, that there are multiple types of coverage in that one package. You can find this oftentimes in the US, there's something called a business owner's policy that really just takes the most common things that business owners need, puts them all together. There's one price, you pay that, and you get all these coverages. So you might be able to find something pre-existing where the company says, this is what most business owners in your country or in your state need. And so here's what we would recommend, and you just pay one price and that's it. But oftentimes, if you're able to work directly with an insurance agent, and we'll talk in a minute about what that means, then you can create a package that's tailored to your individual needs. So you may not need auto insurance because your business doesn't do any transport. So they would be able to take that out, but you might need equipment insurance instead. And so they would put that in, even if it's not part of this pre-existing policy. The final point before we move off of this too much is microinsurance. And so this is something that's becoming more and more common in Asia and Africa, in particular, Latin America, I think to a lesser extent. And microinsurance is sort of the microfinance, but for insurance companies. And so one of the very cool areas that I think is really exciting is that a lot of microinsurance now is being done via mobile app or mobile networks, and it's completely electronic. So you may never actually meet an actual person, but you can purchase and make claims under insurance through a mobile app or online. Another area that's related is microfinance, and so a lot of microfinance lenders are now offering or suggesting or recommending microinsurance partners. And that's in part because they want to protect what they've lent as well. And so that's one way. If you're involved with funders, if you have investors, micro or macro, that can be a good resource to get information and sometimes get better pricing on insurance. The final point on microinsurance that I'll raise is that it's sometimes set up differently, and this is sort of an emerging area as well. But rather than a typical policy where I say I'm going to insure my car, if something happens to my car, you'll just pay whatever it takes to fix it, or you'll pay for me to buy a new one. There's something called index insurance or parametric insurance that's specifically related to, it's become more and more common because of climate shocks and natural disasters. And what that says is that it doesn't matter what actually happens. So if you plant crops in a particular region and there's a hurricane or a tornado that goes through that region, the insurance company won't come and ask you what happened to your crops, how many are gone. Instead, they use a formula, an algorithm to say, all right, we know that geographically you were in this part of the storm. Based on the overall storm, we think that this is probably what happened. So everyone who's in this area who has this policy gets paid X dollars. And so that has benefits and drawbacks. It's much cheaper for the insurance company because they don't have to put people on the ground to come in and review the damage. And so because of that, it's also cheaper often to purchase, but it is then tied to an index and tied to sort of the average that happens to people, or the algorithm of what's we think happened to people, rather than being related to the specific damage that you received. So I want to stop briefly there, and keeping an eye on time here. That's the longest part of the presentation, but I'd be happy to answer any questions before we move on, if that would be helpful. All right. I don't think I hear any unless there were any in the chat, so we can keep going.
Yeah, there's only one.
Oh, okay, great.
Coming from Jin, asking about insurance for motorbikes and cars.
Sure, yeah. Just in general, was there anything more specific?
No, nothing.
No. Okay. Yeah. So auto insurance, that's a great point. It's not limited just to cars. It can cover motorbikes. It can cover trucks, lorries, anything that you use in your business. And I think when you're looking at auto insurance for those vehicles, the two things you really want to consider are first, what's called liability insurance, which means if you hit someone, hopefully not, but if you're in an accident and you cause damage to someone else, liability insurance would pay for the damage that you or your motorbike, excuse me, causes. And then the other is the actual replacement or repair insurance. And so oftentimes with auto insurance, what you'll find is that the insurance company will cover either the cost of repairs, or they will give you money equivalent to the value of the vehicle. So if you have a bike that's worth $5,000, a motorbike that's worth $5,000, rather than you telling them exactly how much the repairs were, they'll give you $5,000 if that's the value of the vehicle. Is that helpful? Any other questions on that?
No, I think we can move on.
Okay, great. So to then talk a little bit about who's involved in insurance. So there are really sort of three main groups of people. The first are insurers, or what we call insurance companies. And those are the companies that actually will take the risk and will pay the money if something happens. And so they range from huge multinational corporations. Lots are based in Switzerland, several are based in the UK, several are based in the US, France, really all over. I don't need to list everywhere because it's literally every country. But there are insurance companies that actually will be the ones that pay out the money if there's an accident or damage. But oftentimes, rather than coming to you directly or having someone from an insurance company going around and talking to people and being part of and selling the insurance policies directly, they work through third parties. So these third parties there are lots of different names, but the most common ones are insurance agents or insurance brokers. And as you'll see on the slide here, I've also listed tech because more and more insurance companies, including micro insurance companies, as I mentioned, are working directly online. And so rather than having a person who might come to your business or your home and suggest that this is the sort of insurance that you should consider purchasing, you can do the entire process online. And so those insurance agents, insurance brokers, and those automated websites and apps are sometimes employed directly by the insurance company, but oftentimes will be employed by themselves. They'll be their own business. And one of the benefits of that is that they can look for coverage and policies from multiple insurance companies. And so we'll talk a little bit more about how to sort of select the policy that's right for you. But sometimes if you have an insurance agent that works with multiple insurance companies, that can be a boon because they can look for the best price for you or the best coverage level, or they can recommend a company that, for example, is better at the type of insurance claims handling for what you need. And so the insurance company will work through these agents, these brokers, or apps or websites, and the agents will be the ones who actually sell to you, the customer. And once they sell an insurance policy to you, you'll pay the premium, which is the cost, as we discussed. You'll get some sort of agreement that says this is what your coverage is. So this is these events, these things are covered: your building, your car, your motorbike, your machinery, your equipment, your website, and it's covered from these damages. So I think the other important thing to talk about here, and this is really something that is a large part of our practice here at Sidley, is regulation. So insurance companies, like banks and other sort of key financial institutions, are subject to a great deal of regulation. And so in every country, in every state, there's regulation by the relevant state. This is usually, in most countries, this is at the sort of national level, so it covers the entire state. Sometimes, and the US is one of these examples, there will be actually more local, provincial, or as we call them, states here in the US that govern your insurance. And so we'll go into a little bit of how that regulation works. But I think the important thing to remember is that as you're thinking about an insurance policy, you're thinking about coverage you need. You want to make sure that you are working with a licensed company. So that's a company that is registered with your state regulator, that has filed all their forms and paperwork, that has answered all the questions so that the state has approved them as an insurance company. There are a couple of intervening, I guess, or superseding maybe organizations that also govern insurance. And I want to raise these just because they can be a good place to start if you're looking for more information about regulation in any specific country or any specific state. And so the first is the International Association of Insurance Supervisors, that's IAIS. And that doesn't have any governing authority, but is exactly what it sounds like. It's an organization, and the national or state regulators from a variety of states and countries are members of that organization. And they have a lot of good resources about how to well regulate insurance companies. And then the other is CIMA, which is an inter-African, specifically Francophone Africa, conference of insurance regulators. And my French is terrible, so I won't butcher the full name, but that's another organization that's helped to standardize across its member states. It's helped to standardize insurance regulation and insurance standards. So I'd like to do a little bit of a case study or an example here, and I've selected Kenya in part because their websites are in English, and as I said, my French is terrible. So what the regulator really does, first off, is they register insurers, insurance agents, insurance brokers, all of the parties from whom you would be purchasing or dealing with insurance. The state regulator will require some form of application to have a license to be able to use that. And so I pulled this from the Insurance Regulatory Authority website in Kenya yesterday sometime. And so it's relatively current. But as you can see here on their website, they have lists of approved insurance companies and approved insurance intermediaries. And those intermediaries are the agents, the brokers, et cetera. And so if you're looking to find an insurance company or insurance agent, or more likely you find one, they're recommended by a friend or by a microfinance partner, you can go to the website of the Insurance Regulatory Authority in your state to make sure that they're licensed, and you can check them against this list. So that's kind of the first step. It varies state to state, and I should say that just having a license doesn't mean that you're a good insurance company. It doesn't mean that you're financially, in great shape, or that you have a stellar reputation for dealing with claims and dealing with payouts. But it means that at the very least, you've met the minimum requirements of that state. And oftentimes there are financial requirements involved. So they want to make sure there's some level of financial solvency, that it's a company that's going to be around. And then secondly, that they have all of the necessary people in the country and phone numbers and telephone numbers and websites or whatever else so that you can contact them. So the other area where I think regulators really come in is as a consumer resource. And specifically, this is, again, using the IRA in Kenya, specifically with respect to complaints when something goes wrong. So something happens to your car, you go on the website of your insurance company and you say, this happened to my car, and they just don't reply. You don't hear back. Or you call your insurance agent and you say, this happened, I'd like to receive a payout from the insurance company, and they say, oh, that isn't covered, or that doesn't count. Or again, I think often when there are problems, which is not all the time, but when there are problems, it's often just unresponsiveness. And so the regulatory authority can serve as sort of your proxy. So you try to get in touch, you submit the claim online, you call, you send an email, you tweet them or reach out through Instagram, and they don't reply. You can go to the regulator often on their website, and there's a process where you can submit a complaint or file a complaint that says that this company hasn't paid out as they were supposed to. And what's supposed to happen once you've filed that complaint is that the regulator will reach out to the company on your behalf. They'll investigate if they need to, or they'll talk to the insurance company and try to resolve it. And what that practically means is that if an insurance company receives a certain number of complaints, or the regulator thinks that an insurance company isn't living up to its obligations, they can lose their license and then not be able to sell insurance anymore. So it really, when there is an issue, going to the regulator is a great way to make sure that it gets resolved sort of as quickly as possible. There are a few other ways that regulators are involved, and we don't have to go into a lot of detail here, but the one I do want to really emphasize is consumer education. So while I would jokingly refer to myself as brilliant and say that you'll get all the information you need just from this 1-hour presentation, sadly, that's not true. Only my children believe that, and I don't even know why they do. So you're likely going to need more information if you're selecting an insurance policy. And the regulator, often on their website, sometimes through presentations like this one, will have good information about specifically what is going on in your state and what you might need, how insurance works, and some do's and don'ts of purchasing business insurance. So that's a great resource if you're looking for more information that's tailored to your local area or your state. The other is that some, including the IRA in Kenya, offer standardized policy forms. And so those are, as I said, insurance is a contract. A contract is written down, that's the policy. And so rather than each company having their own policy, sometimes a regulator will offer a standardized policy. And then finally, this shouldn't happen often, but occasionally insurance companies do face insolvency, where they are going to be unable to pay. And so when that happens, a regulator is often the state regulator will be the entity that steps in to try to maximize payments and to take over the company if they're really in poor financial shape. So I think unless there are any questions there, we can move on and tick through these last couple of items here quickly, and then leave some time for questions at the end. But as you're looking at this and thinking about your business, you might be saying, well, what insurance do I need? What should I consider? And so I have a few thoughts that I'll share here. I do want to say that this is a very individual decision, and there are lots of different ways to think about this. So these are the sorts of things that I think about when I'm looking at insuring my own home and auto and life and everything else. But there might be other considerations that you want to think about as well. So before we go into that, I do want to just take a step back metaphorically, which is that Insurance is really one tool in the broader idea of risk management. And so risk management for your enterprise, for your business, really just means how do you know what can sort of cause things to go poorly. You know that there are areas where if X, Y, or Z event happens, you'll have to face financial difficulty. And so insurance and risk management generally is about how do you limit those things from happening, how do you prevent them, and how do you mitigate their impact. So insurance is a good tool for the things oftentimes that you can't control. You can't control climate. So that's a big portion of what we've talked about here. So a natural disaster is always going to be outside your control. So that's a good time where you might want insurance to cover a natural disaster. But if you live in a flood area, you might be able to build with materials that are more resistant to flood. You might be able to raise the building where you are, or have other equipment or machinery placed somewhere high up where it's not likely to be damaged by floods. So insurance is, the example I always give that's relevant to me is that I have insurance for my car. I use my car every day. It's how I get to the office here to do work. It would be difficult for me to not have it. So I have insurance for my car, but I don't drive at 120 kilometers an hour. I was thinking miles. I don't drive at 300 kilometers an hour because that would still be dangerous. I don't leave my keys in the car and leave it running because then it'll be stolen. So just because I have insurance that protects me if something bad happens, that doesn't mean I'm careless or I go out of my way to not take care to prevent something bad from happening. So insurance is really I think it's an important tool, but it's one tool in a lot of things that you can do to try to prevent bad things from happening to your business. The second area, as I mentioned, is mitigation. And that's, you can't stop a flood from happening, but if you use materials that are water resistant, maybe you can stop it from having as much damage. Or if you change where you store your product, your grain or your corn or crops, to somewhere that's airtight and watertight, then even if a flood happens, your product won't be damaged. So that's risk mitigation. You want to make the damage as little as you can. And then the final area is risk spreading. And so this is not insurance specific, but the classic example here is that you have a variety of merchants. You have 10 merchants that are going to ship their products across a very dangerous water crossing. And so these 10 merchants are all leaving. They all have their own boats. They're all leaving at the same time. They're all arriving around the same time. Rather than each merchant putting all of their products on their own boat, each merchant will take 1/10 of their products and then 1/10 of every other merchant products. And that way, if something happens to one boat, rather than one merchant being completely wiped out, having no products left, everyone loses 1/10, but keeps 9/10 of their product. And so that's just risk spreading. And there are different ways that you can do that, both within your own business and with partners or with other organizations. So that might mean that if you have key equipment, you don't store it all in the same place. Some of it is put in one location, some is in another location. If you, for example, have a cash-heavy business and you're worried about theft, all of your cash isn't stored in one place. You put it in different places or with different people so that if something happens, you're limiting the damage. And that's not insurance specifically, but that is one area where it's a small thing, a relatively easy thing to do in some cases that can really help prevent that sort of catastrophic damage. So as we think about what sorts of insurance you might need for your business, I think the first step is to do what we would call a risk assessment. And this is to come in and say, number one, what is most important to my business? Maybe it's people, maybe it's equipment, maybe it's machinery, maybe it's computers, maybe it's cash if you have a lot of cash. What can you not operate without? And when you're thinking about insurance, what I would suggest, one way to think about it at least, is to say, okay, what are these things that I can't do my business without? And maybe those are what I want to prioritize, getting replaced quickly or getting business income insurance if something happens to this, so that I'll still be able to have some income from my business. And then as you're doing that, I think it's also helpful to think about likely risks. So perhaps theft is a major concern. Maybe fire, maybe flood. These are all areas, and as I said, if you have a website that stores private information, individual information, then maybe cyber is a big risk. So you want to think about what's important to the business and what are the things that might happen to it. What are the sort of more likely scenarios? And I think that's one way of, as I said, of many. There are lots of good ways to approach this, but that's one way to think about what you might want or need to insure. So once you've done that and you've decided that you want to purchase business insurance, you want to get a policy, then how do you find it? And here, this is, I unfortunately can't give very specific advice because it varies so greatly from state to state on the best way to find insurance. But one thing that you're already involved, obviously, with ITC and a great organization here. So if you have partners, if you have colleagues or other people who do similar business in your area, that can be a good place to start. In addition, if you're part of a trade group, if you're part of an association of agriculture workers or agricultural companies or an association of tech companies in a particular state, oftentimes the organization can work with an insurance company or insurance companies to provide insurance for everyone in the organization. And it's an economy of scale. If you purchase insurance for everyone, then everybody pays a little bit less. So, and then finally, I mentioned this before, but if you have partners, if you have investors or micro lenders that have given you capital to work in your business, that is another good source that they might be able to help introduce you to insurance companies or insurance agents that can help you decide what you need and the best way to do it. The second point on finding insurance is what I mentioned before, and that's that you want to make sure when you're doing this that you check the website or the registry in your home state to make sure that the company and the agent that you're working with are licensed, that they're registered with the state. As I said, that's not a guarantee that they'll do well. There are a lot of licensed agencies that have all sorts of problems and licensed companies that have all sorts of problems, but it means they've at least hit that sort of baseline threshold. The next point that I'll raise as you're considering this is just the cost. And so this is something that I'm a lawyer, not a business person, and we're notoriously bad at math. But so many of you probably are already thinking about this. But when you're deciding what to insure, you also want to think about what the cost is. So the classic example here is that you can purchase an insurance policy that for a car, for example, let's say, and the cost of the insurance policy over the course of 1 year is the same as the cost of the car. Well, that doesn't really provide you much, because if you lose your car or something happens to your car, you have to buy a new one. The insurance company is just giving back the money that you've already spent. And so as you're thinking about the key elements of what you want to have insurance for, another important point to consider is this actually, is it worthwhile? Will you be getting value? And generally insurance companies, this is their business. So they will try to provide value, but there are definitely examples where, because something is maybe due to a location or due to complexity, or just because they don't understand your business, it'll be very expensive to purchase insurance. And in those scenarios, what you can consider instead is saving that money. So instead of paying an insurance policy, you can put that money into a specific sort of account, whether that's a real account or just a notional sort of on your books in your mind, and say, all right, if something happens, I'm going to save this money instead of paying it to an insurance company. So I think that's unlikely, but it is just something to keep in mind, that insurance isn't magic, it's risk sharing. And so anytime you purchase a policy, like any business decision, you have to weigh the benefits versus the cost. And if the cost is too expensive for the benefit you're receiving, maybe it's not worth it for that particular company or that particular policy. The final point, as we're looking at sort of how do you find insurance and select an insurance company, is renewals. And what that refers to is that every insurance policy, well, let me take that back. Almost every insurance policy has a time limit, has a term. So there are some exceptions that we don't need to get into here. But generally speaking, your insurance policy will last for 6 months or 1 year or 2 years. And so when you're selecting an insurance policy, you want to make sure you know how long it lasts. And then you also want to make sure you know what happens when it's over. So some insurance policies will say that they automatically renew, which means that at the 1 year mark, when it's over, they will send you a new text to pay the premium. And once you pay that premium for the second year, the policy continues. Others will say that it'll continue, but we can change the price. And then finally, there are some that you have to, when it ends at the 1 year mark or the 2 year mark, you have to go back and get a new one and start the process over. Now, I will say there's some benefit to doing that, because if you wait and every 1 year you look at your policy and you talk to your company to see if there are different policies available, or if there's a different way to pay for it that might be cheaper, or if your business changes and you think you need to cover different risks. So it's not terrible to revisit this regularly and say, do I have what I need? But when you're purchasing it, this happens all the time. Someone will purchase an insurance policy, they'll forget when it expires, and then something will happen and they'll realize that the insurance policy expired and they're no longer covered. So you want to make sure you know exactly how long it lasts and what to do to get a new one or to keep it going. So I think just very quickly, because we've talked about this a bit already, but when you're purchasing a policy, what you want to think about and what you want to look at are the coverage. So that means what is being covered, what is being insured. Is that equipment? Is it real estate? Is it people? Is it cash? Is it cyber? And making sure you have the right things. The second point is what are called exclusions. And so that's when you're reviewing an insurance contract, an insurance policy, it may say that we will not pay you in certain events. So examples might be, we'll pay you for damage to your property, but not due to an act of war or an act of terrorism. Or sometimes now you might see that they won't pay you if there's a problem due to a pandemic or an epidemic. So the policy itself will say, these are the things that if this happens, we won't cover your business. So it's important to just really closely look at those and make sure that they're things that you think are sufficiently unlikely to happen, that it's still worth it. And then the 2 points that we raised before, but I'll just cover again briefly, are limits. So that's usually a cash amount that we say under this policy, no matter what happens, the most we will pay is X dollars or X euro. And then finally, deductibles. And that's the idea that if you have $100 worth of damage, you have to pay $5 before the insurance company will pay the remaining 95. So these are all elements of an insurance policy that you want to review and make sure that you understand. So I want to, as I said, leave time for questions, but just very briefly, I will mention climate shocks and climate change. So this has been a huge impact on the industry. Lots of regulators, the IAIS and lots of state regulators are looking at a very detailed changes to the industry because of climate change. But one of the effects of that is sort of new and innovative products. So the one I mentioned is index insurance or parametric insurance. That's where, as I said, rather than going and calculating individual damage, a company will say, if a hurricane hits this area, we anticipate that it will be X dollars of damage. And so we'll just pay you that. You don't have to send us pictures. You don't have to tell us what actually happened. And then the final point that I want to talk about with climate impact here is that many companies now will give you incentives for mitigating that climate risk. So let's take the flood example again. If you live in a flood zone, your insurance company might say, okay, we'll give you flood insurance and it's going to cost $10. But if you if you build a watertight storage area and you use this material, then it will only cost you $8. So they will give you financial incentives to mitigate climate risk. And sometimes that can even extend to using sustainable materials or taking other sustainable steps, because insurance companies, and in large part due to the overall economy and the financial system of the world, realize that that climate change is something that will dramatically shift the industry. And so mitigating climate change, not just the risk, but the actual human-made climate change effects, is really a financial incentive as well. And so I think that's one thing to look at as you're selecting an insurance company is, are there things that you can do, changes you can make to your business that will allow you to pay less for your insurance and perhaps be less likely to experience damage. So I'll stop there for questions. I also, if you review the handout, my contact information and a little bit of biography is on the last slide here. But in the interim, I'm happy to answer any questions or cover any areas that we didn't cover so far.
Thanks, John. That was very informative. There is a question from Christine. She's asking if there's a version of the IRA in Kenya in all or most countries, or any other version of an insurance regulatory body.
That's a great question. Yes, so almost every country, in most countries that I'm aware of, do have some sort of regulatory body. And if you look at the International Association of Insurance Supervisors, that's IAIS. If you go to their website, they have a list of member bodies. And so that lists out, for example, the US Regulatory Authority, the UK Regulatory Authority. And so that would be a good place to start if you're not sure what your state has in terms of a regulatory authority. And as I said, my contact information is in here. So if you have trouble finding it, I'm happy to point you to that list as well.
Right. There was somebody who would like to ask question.
William,
William,
I
yeah, he
believe.
raised his hand before.
Please feel free to unmute yourself now and ask your question.
But he left already. He's no longer here. Let me see. Yeah. He left already. Too bad.
Okay, well, we have another question from Pablo. He's asking, can crop insurance companies reject smallholder farmers' applications to be insured given the higher frequency of extreme weather events, such as drought years or heavy rainfall, or average higher temperatures that prevent crops, for example, coffee, to achieve the normal yields? Great question.
Yeah, the question was, can they reject applications?
Yeah, smallholder farmer applications, yeah.
Yeah, so it depends on the state, but generally speaking, an insurance company can reject applications within certain parameters. So there are sort of protected areas where legally they may not be allowed to reject an application based on some characteristics, but they can reject an application based on others. I do think that coffee in particular, there are a lot of really interesting micro insurance schemes for coffee that oftentimes work with like grower partners or commodities purchasers that will allow for, because I think especially for smallholder farmers and any sort of small enterprise, it's very difficult to it can be very difficult to have the scale to sort of make insurance companies take notice and really be engaged. And so depending on the insurance company, they might not have a policy, or they might say that something is uninsurable. And that does happen even, regardless of the state. If there might be, if you live in a flood zone, for example, where it floods 3 times every year, an insurance company might say, we're not going to give you flood insurance because we know it's going to flood 3 times a year. So if it's something like drought that is higher incidence, but still not a sort of knowable, predictable, then most insurance companies, I think, would still be able to price that and would want to at least try to cover that. But I think if you're able to work through an insurance regulator to find perhaps companies, if there's a buyer or an association of other smallholder farmers that you can work together to find insurance coverage, that's another area that might work. And there's also it could be its own presentation sometime, but there's something called self-insurance, which is where, or mutual insurance, which is where instead of finding an insurance company, you can get together with a bunch of other people who might not be affected and try to share the risk that way. Now, the problem with drought or floods are that they usually affect the whole area, so that might not be a good solution. But I think if one insurance company has rejected an application, that doesn't mean that every insurance company will. And I would definitely encourage you to keep looking, and to in particular look at the IAIS, and then ITC might have some information about this as well. But I know the World Bank website also there's an element of that works specifically on microfinance and microinsurance, and they might have some good resources as well to find an alternative to the sort of classic big company that might be saying this is not insurable. I think to maybe expound on that slightly, I think what's really happening now in the industry, if I can go a little bit broader, is that what's happening to smallholder coffee farmers is going to be happening to everyone in 20 or 30 or 50 years if climate change isn't reversed. And so insurance companies, and especially younger entrepreneurs, this is, if anyone wants to get into the space, it's ripe for disruption, as we like to say. But insurance companies are looking to develop ways to price that risk, to be able to cover those things, because the traditional model probably doesn't work anymore. And so that's something that a lot of big companies and a lot of small sort of startups are working to figure out a good way to do that. So I think even if some of the sort of old line companies might not have a product for that yet, try looking, at a couple of newer companies, or, as I said, the World Bank website has some good resources. The IAIS might be able to help as well, to find companies that are more innovative.
That's super interesting. Thanks, John. We have one last
Thanks
question
for indulging me.
From Elizabeth, and I saw that you had your hand up, Elizabeth. So would you like to go ahead and unmute yourself? Feel free to do that. Otherwise, I can read the question from the chat box.
Okay, thanks, Diana. So generally John has answered part of that question. So mainly it was if we can get maybe a short list of some insurance products that pertain to crop insurance, or any products that pertain to sustainability insurance, mainly because, like, for example, I'm in Kenya, and currently the insured population that is on all insurance products is less than 3%. So what happens is, when a population doesn't know what is out there, it's harder to know where to start and which direction to go to. So even when you're talking to an insurance agent, you're very limited in terms of your information. You're limited in terms of what can work for you. And you can't even give them feedback because you don't know what is out there. But with a list, so now my question was, can you get a list of what's there in other markets with regards to this type of products, so that one, you know what exists outside there, so that even when you're talking to insurance agents, some of them allow custom making, so that you can also be able to advise them based on your business, because you understand your business better. So how can you, if you're aware of products, how can you tailor that to yourself and then go to an insurance company and have that custom made for you? And also, the more we are aware of these products, we can move our own market instead of waiting for insurance agents and insurance companies. I hope I'm clear.
Yeah. Very clear, and that's a great question. I'm not aware of any, I don't have personally a sort of list of those products, but we can do some looking, and I can communicate through ITC. My guess is that some of the organizations I've mentioned probably have some good lists of the types of insurance that you might consider, and how crop insurance works, and in a variety of countries. And so I think I try to find a good third-party resource on that.
Yeah, and I can also try to connect you with the ITC's Agri team. For sure, they will be more knowledgeable than my team in terms of that. But yeah, so I will reach out to you, Elizabeth, after this. If there's no more questions in the chat.
No, I don't think so.
All right.
Well, thank you very much. This has been a pleasure, and I really appreciate the questions and the attention, and look forward to hearing more about all of your fantastic businesses.
Great. Thank you so much, John, for the great presentation. Thank you to the whole ITC team and Sharika for facilitating this. And thank you to all of you for joining us today. It's been a pleasure. Happy long weekend to everyone. And unless anyone, Sharika, you would like to say anything else, I think we can close the session.
Who just joined, but it's way too late. Yeah, but I will share and circulate basically the PowerPoint and also the recording after this. So we will be in touch. Thanks, everyone, and have a good evening. Bye.
Thank you. Bye.
Thanks.